Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Aventel, which can be 6x from here. Even after such a big move over the last 2-3 years, it can still go 6x from here. So I'll discuss about its salient features. Let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Aventel Has, small request that kindly support me on Patreon. And once you do that, it helps me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And also, if you pay $100 upfront, you get 1 year access by paying for 10 months. And if you cannot get the Patreon membership, you can directly email me. You can get other forms of membership as well by paying in the account. Also, if you want detailed analysis on your stocks or number of stocks you are holding, you can email me on that as well. Now, what the company established in 1990, Aventel provides wireless technology for defense. It gets major orders from government, DRDO, etc. It is probably the only player in its space, in this niche space, that is providing this form of technology. Apart from, you can say, one more company that is listed in this space just recently. Got order from DRDO in the last 1 year or so, but the market cap has reduced to around 450 crores. It has declined around 25% from the top. If we look at the numbers have been pretty strong. Sales went up by 62%, profit went up by 24% to 7 crores. There's decent promoter holding but low institutional holding, but this is advantageously because of the fact that it is a very small cap company. You can call it as a micro cap company of 450 crores. Also, ROE of 20% is pretty strong, plus operating profit margin of 22% is also extremely stable. In terms of performance, I believe the stock has surged in the last 1 year or so, but has declined over the last, you can say, 2-3 weeks. Have been 4x in the last 1 year, and since I discussed this about a year back, it has become 4x and now has been declining from those levels. I remember doing a video on the same stock at around 330 340 rupees, and it went to 1300 1400 levels. Currently trading around 1100 at very reasonable levels. Results have been impressive continuously over the last 4-5 quarters, and government push on defense will only help the numbers going forward as well. So why I believe it can be 6x from here. So I believe strong barrier to entry, as DRDO orders are hard to get for any company. If any of the companies get into this space, it will take a number of years for them to establish itself. And something like you can say Aventel, which has been in this market for the last 30-35 years, they'll continue to get very critical orders and will continue to have higher margins going forward. With the kind of geopolitical situation we are in, we have a need for technology in defense, and this will only increase going forward. We are seeing what is happening in Europe, in the Americas, etc. We have to build our technology capabilities with respect to defense, and this is exactly where companies like Aventel could do extremely well going forward. There is also schemes of you can say defense PLI that is coming through, so a lot of business that is going to flow through over the next 2-3 years into the company. Valuations are attractive at the moment at around 450 crores. Market cap, it is trading at only 2.5 times sales. Around 200 crores of sales is very much possible in FY23 or more than that, and margins are pretty good. So I think valuations have become attractive after the stock has fallen some 25% from the top. Business will pick up once the pandemic is over. Business will pick up even more. So going forward, I think from FY23 onwards, we'll see better numbers coming through, especially with the PLI scheme and a lot of things that the government is doing. I think numbers are set to be pretty high this time around, and you cannot match that with the numbers in the last 2 3 years that these defense companies have produced. uh, Currently, it is trading at 2.5 times sales. Not very expensive. Can easily trade at 7 8 times sales, and sales growth will be there also going forward. So over the next 4 5 years, I see the stock to be 6x at least. And so this is one of the stocks where one can probably put some money that they are not worried about, and see as to how things go from here on in. Extremely low market cap for such a business, such a critical business that is doing. And I think this whole sector of defense and defense technology is set to grow going forward. High net profit margin and ROE plus low equity will also help in traction of the stock on the upward movement. So, in my opinion, what needs to be done is buy as an SIP. You can buy here, buy on dips, and keep adding on very bad days. Currently, the stock is very attractive at around 1100. We have seen the market decline. I'm not ruling out another 10 15% fall from here, but a major portion of the decline in most of the mid and small cap companies have already been done. Have a 5 year view. This can be a multi-bagger over a 5 year period, but keep track of news flows, keep track of numbers, any changes in government orders, any changes, corporate changes, corporate governance issue. You have to track that in smaller companies. So this was my video on Aventel. Please like and subscribe my channel and hit the bell icon so you get a video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.